The US dollar crisis could end up being a massive issue in the US markets if adequate measures are not taken by the Fed in advance. The Fed's forthcoming strategy shift could bring about some major changes to the US dollar index, according to chief economist and global strategist at Euro-Pacific Asset Management, Peter Schiff. Is a US dollar crisis on the rise? According to Peter Schiff, there is a chance that the US dollar's weakening will go on till 2025, following which there are chances of a major economic crash, followed by exponentially rising interest rates. Is the US dollar in danger? The value of the US dollar as per the dollar index could sink to an annual low and could even challenge the $2020 dip, says Peter Schiff. If this indeed happens, the US economy could be in an indeed fragile state, and consumer prices would soar exponentially. The implications of the dollar weakening could have some serious impact in domestic inflation, as it would end up making international goods and services expensive in the United States. The US dollar index just tanked to a 13-month low. The strength of the dollar is the main reason year-over-year inflation fell from 9% to 3%. Ironically, the Fed is using low inflation as an excuse to cut rates. But cutting rates will send the dollar tanking and inflation soaring. The Economist opined in another X post on Friday. The US dollar index just hit a new 2024 low. The last time the dollar index was trading this low was December 2023, he shared on X Wednesday, while noting that the dollar index is actually still relatively high, Schiff warned. Schiff also noted that a weakening dollar could exacerbate America's economic problems by making it easier to service dollar-denominated debt, but at the cost of higher inflation and reduced consumer purchasing power. He pointed out that while the dollar has lost value, gold prices have climbed, reflecting market concerns over the Federal Reserve's policies. Schiff criticized the Fed for making policy mistakes, suggesting that cutting rates now will worsen economic conditions. From March 2022 through July 2023, the federal funds target rate range escalated from a mere 0% to 0.25% to a substantial 5.25% to 5.50%. While generally, lower interest rates could stimulate economic growth and buoy investors, skepticism remains. Schiff looked at the US dollar index, which measures the value of the greenback relative to a basket of foreign currencies, including the euro, Japanese yen, British pound, Canadian dollar, Swedish krona, and Swiss franc. The index was established in 1973 with a base value of 100, reached a high of 164 in 1985, and hit a low of around 70 in 1980. 2008. Most recently, the index fell following Powell's remarks suggesting a policy shift. This forecasted depreciation in the dollar could have broad implications. A weaker dollar generally makes U.S. exports cheaper and more competitive abroad, potentially boosting U.S. manufacturing and export sectors. However, it also makes imports more expensive, which can contribute to domestic inflation by increasing the cost of foreign goods and services. Thanks for watching. If you found this video insightful, don't forget to like, comment, and subscribe for more updates on economic trends. As Peter Schiff warns, the looming US dollar crisis could lead to a major economic crash and soaring consumer prices. Stay informed and prepared. See you in the next video.